Hi there, traders. This is Brad Gilbert with today's trading action. All right, now just looking at your charts on the hourly charts, it doesn't look like there's a lot going on, right? We are starting to see the dollar pairs drift down towards their support levels. Dollar Swiss just drifting through. Dollar yen, the odd one out, sort of coming back to test resistance. You got to think that's a good level to be getting short, even though the rumor is massive hedge funds have piled into long yen positions, right? And that can be problematic as we go forward because if everyone's long yen, well, the yen's just going to go down and dollar yen will go up. Now, dollar CAD, it doesn't want to play, right? But dollar CAD is one of the trickier currencies, or the Canadian dollar, oil being a big part of it, and then the dollar and the Canadian fundamentals pulling and twisting it all over the place. So it's a little bit bent out of shape. And that's not great because we do have Canadian inflation numbers today. Now, Euro very quickly and sterling very quickly testing those resistance levels. Aussie, I was talking about this yesterday. I thought it would have taken a day or two to get there, but it's already here, right? And Aussie just above those levels. Kiwi not really showing signs of life at the moment. So you look at that and you think, well, there's not a hell of a lot. I mean, there's a little bit going on, but it's not crazy, right? Well, let me just show you what is a little bit crazy. Right, you look at the Federal Reserve, the interest rate probabilities here, right? The market is now factored in 67% chance of a 0.5% cut from the Fed. I think the market's got itself way ahead of itself, right? I still think there's just looking at it, my gut tells me it's 0.25. We haven't seen dramatically weaker numbers. We haven't seen it sort of sliding and crashing. So this could be a bit of a problem when it comes time to the Fed interest rate decision. We'll see how it plays out, right? And what we're looking at today, and this is where we get a little bit of insight, right? So it's like the market knows something that I don't. But today we have US retail sales figures. Now, weaker numbers or really strong numbers could lead to a bit of a shift in that sentiment for the 0.5% cut, right? And that'll see if the numbers are weaker than the poll, okay, and so looking at the year on year, we haven't even got the year on year numbers up there, then what you'll see is that 0.5% maybe increase. If we see stronger numbers up towards these high end of the maximum forecast there, well, then we might see that ease back a bit and you'll see the dollar give back some gains. So it's a little bit in the balance. This isn't going to change the outcome. And I don't know if it'll have too much impact with the 0.5% cut expectation or the 0.25. We'll have to see how it plays out. But this is the other thing. I was just talking about dollar CAD, right? And we have the Canadian inflation numbers coming out today. So year-on-year numbers, 2.1, spread or the range for the forecast, 2 to 2.5%, right? So really looking at the bottom end of expectations. And as I was saying, this is important because the Bank of Canada is now in a very similar situation to where the Fed are, right? And what I'm talking about is the most probable action is a cut at their next meeting on the 23rd of October. And at the moment, that is 0.25%, it's 70%, but there's a 30% chance there almost of a 0.5%. So the numbers do matter, right? Really weaker inflation numbers in Canada, right? You're going to start to see the market pricing in 0.5% cuts, and that should lead to a lower CAD, right? And when we're talking about lower CAD, that means the dollar going up, right? So this is a bit of a conundrum. I'm sort of saying we're going to see lower CAD, and then you look at the situation with the dollar, right? The dollar's going to go down, but so is the CAD, right? They both can't go down. So one thing to be looking at when you have this situation is focus on the CAD crosses, get out of the dollar CAD, right? Because there's too much just collision of basically both central bank forward guidance and interest rate projections are all colliding, right? So dollar CAD doesn't make a good sense. The CAD crosses is where the action is, all right? So and this is the other thing, right? I'm just coming back just to reiterate on those interest rate probabilities. This 69%, I had a few traders asking me yesterday, what happened? What happened over the weekend where this went from being 30% probability up to 50, now up to 67? It's more like the market's running with a bit of panic, right? And when it starts to run like this, it's almost like the market's like, oh my God, this is what's going to happen. And positions shift. And then you start to see big moves happen without fundamental data coming out, right? So today, let's just focus on what's in front of us. We've got the retail sales figures and the Canadian inflation numbers. Let's see how they play out. I'll be covering a CAD, or keep an eye out for a CAD inflation macroeconomic signal today. I'll be looking at that very closely, looking at the CAD crosses and trying to identify which CAD cross would be the best one to trade for either a weak or potentially weak number, which is what the market is focusing on, or a strong one, right? So this is going to get a little bit interesting as we move closer to like the Super Bowl of releases, and that's the Fed rate decision. At the moment, it looks like the market has got itself all bent out of shape, rushing for 0.5. We'll see how that goes through the course of today and tomorrow, and get ready for those numbers coming out in a couple of days' time. All right, guys, good luck. All the best. Cheerio.